The U.S. economy grew at an annualized rate of 4.3% in the third quarter of 2025, a result well above expectations and attributed mainly to an acceleration in consumption. This publication, delayed by nearly 2 months due to the government shutdown, surprised analysts who had expected GDP growth of around 3.2%. The 4.3% growth represents a 1.1% increase over the second quarter, driven mainly by household consumption, which contributed 3.1 points to the total. Investment declined slightly over the period, while foreign trade made a limited, even slightly negative contribution. This unexpected performance dampened financial markets, as it increases the likelihood that the Federal Reserve will maintain high interest rates at its next meeting, contrary to expectations of a cut on January 28, 2026. Economists point out that growth is unevenly balanced, driven mainly by investment in artificial intelligence and data centers, while some traditional sectors are struggling. The U.S. government, under President Donald Trump, is quick to celebrate these results as proof of the effectiveness of its pro-growth policy, particularly through tax cuts and tariff reductions. And meanwhile, Europe. The Eurozone economy grew by 0.2% in the third quarter of 2025, according to Eurostat data, with growth of 0.3% in the European Union. This growth was mainly driven by consumption and investment, supported by an increase in exports, particularly in the aerospace and defense sectors. France was a key driver of this performance, with GDP growth of 0.5% in the third quarter, exceeding INSEE's forecast of 0.3%. This French growth represented around $15 billion in additional value added. Growth in the Eurozone was bolstered by the performance of Spain, which recorded growth of 0.6% in the third quarter, and the Netherlands, with growth of 0.03%. Together, France and Spain contributed to 3/4 of the Eurozone's quarterly real GDP growth. Germany, which emerged from recession after 2 quarters of negative growth, recorded growth of 0.1% in the third quarter, officially moving away from recession. The labor market remains robust, with an unemployment rate of 6.4% in October 2025, close to its historic low, and employment growth of 0.2% in the third quarter. However, the job vacancy rate declined, reaching 2.1% in October, its lowest level since the pandemic. Hourly labor costs rose by 3.3% in the euro area and 3.7% in the EU compared to the third quarter of 2024, reflecting sustained wage pressure. In contrast, inflation was stable at 2.1% in November 2025, with service prices rising to 3.5%, while goods inflation slowed to 0.5%. The European Central Bank, ECB, kept interest rates unchanged, anticipating inflation to stabilize around 2% in the medium term, with projections of 2.1% in 2025, 1.9% in 2026, 1.8% in 2027, and 2% in 2028. Economic growth is expected to remain at 1.4% in 2025, 1.2% in 2026, and 1.4% in 2027, according to ECB projections.